Hi there, Serial Trader here. I'm going to do a little analysis here on uranium. And right here I have the uranium futures. And as far as trading view is concerned, this is when they started trading, although that could certainly be incorrect. But the data feed that's coming in for this has it trading beginning on May 1st, 2007. So whether that's true or not, I guess doesn't really matter. It's true on this chart. And that's what I'm looking at. So from that significant high that we had there, now in 2007, that would have been definitely right around a major commodities peak in general, and appears uranium was no exception to that peak. Looks like we have a three-wave decline from the top, so I'll just call it an ABC down, large degree ABC down, and possibly we have a significant low in place, and let's see what that actual low was. Okay, so on this chart it's 1750, and when was that? That was in November 2016. So that is potentially the bottom, or a significant bottom in this market. And subsequent trade since then hasn't been all that convincing, although it looks like it's starting to build a base, maybe a series of ones and twos to the upside before we have some sort of third wave action that would really argue the case that okay, something big is in place and we're starting a new bull market finally, but not enough data to quite make that call yet. And let me just go on a shorter term time frame and see if it looks any better. So on the weekly, yeah, I mean my best guess looks the same here basically. We either have a series of ones and twos, and that'd be 1 2 1 2 1 2, or we have potentially a leading diagonal wave 1 developing here. And let's see, leading diagonal, so we would have our 1 up, 2 down, maybe this is all of the third, maybe this is the fourth, and then you'd have a fifth, and it'd be fairly large degree, probably intermediate. And leading diagonal, you'd have to have 4-1 overlap, which we do. Most of the subwaves would subdivide into 3 waves instead of 5 waves. Even the motive waves would subdivide into 3 waves. So you can see I have a 3-wave move up for wave 3. And let me just get some. So you'd have your 1-3 trend line, kind of like this, and you'd want to have this kind of compressing range here, something like that. Just kind of have that wedge-like look, rising wedge look, leading diagonal. So this is possibly what's taking place here, other than it maybe being a series of ones and twos. But just given the choppy look to it, I'd be leaning a little more towards possibly being a leading diagonal wave 1 up of larger degree, obviously. So that's kind of what I'm thinking here, but certainly nothing tradable at the moment. I mean, if you're going to be trading futures, you definitely want something that's moving and trending strongly, and so far that's just not the case here. But definitely something to keep an eye on. I'd say right now it's just kind of building a base, possibly a major low in place in 2016, but just because the low is in place doesn't necessarily mean that it's going to be a great trade, at least right away. Now, if we do get some sort of completed wave up like this, and it looks like a leading diagonal, you get a wave 2 retracement, and we make a higher low, that could possibly be an interesting entry for something like this, right? A third wave up, but we're just not there yet. I'm not seeing the trade there. Now, looking at this, so this is Yellow Cake PLC, YCA. This is the one I found on TradingView, and doesn't look like it's been trading too long. This one only goes back to, let's see here, July of 2018. Yeah, so not very much price data. Although, it looks like we have some sort of 5-wave motive wave in place here. And then we have a corrective looking 3-wave decline of some sort. Maybe a double zigzag, a WXY. So this could be an interesting setup here. Maybe, I don't know, it doesn't look overly compelling yet, but if you tried to go long here, I guess your stop would be just below here, and that would be at oh, let's see, 206, 206.50. No, 206. So you throw your stop just below 206. Now this is in pounds, and let me just see if there's some sort of relationship here that's somewhat interesting. So if that's our W down, this is our X up. Let's see here. So we didn't quite get down to that. Well, pretty close. We got close to that equality relationship, and this would be between W, and let me just put the waves up here. Yeah, WXY. So we have our W down, X up, Y down. That doesn't look too bad. Got near the equality relationship. You definitely got an ABC down for W, sharp X wave. Although you could go ABC up for X if you go in on the subdivisions closer, and you can do an ABC down for Y, close to that equality relationship, and possibly beginning a new impulse wave up. So it's definitely, I wouldn't say it looks like the most amazing trade setup, but it's certainly attemptable. If you do go long here on the stock, you'd be definitely just putting your stop right below that 206. So not a bad risk reward if you're right and it actually starts going and respects that low. You're not going to lose a whole lot if you get stopped out. So that's interesting. YCA, certainly one to keep an eye on anyways. Now, one I do think looks kind of interesting is CCJ, and it actually has, of these three charts I'm looking at here, between the futures YCA and this one, it has the most price data, and we go back as far as 1996 on this chart anyway. So that's pretty good. So you can see we had this enormous run up in Kameko, which certainly coincided with a broader commodities rally that kind of started in around 2000 and peaked out, depending on which commodity you're looking at, 2007, 2008, 2009. So that's that kind of time frame. And since then, I like the subsequent action. Definitely looks like a clear WXY down double zigzag. I threw up a parallel trend channel here, and you see we had a nice reaction right off the median line there for our wave Y. And let's see if I can get some relationships going on here. So we'll do our WY relationship. Let's see. Didn't quite get to the equality relationship, which would have been 59 cents. Now how about the 618? No, so that it's a little bit distorted here since the scale changed so much, but that's okay. Still looks like a nice, double zigzag. Sorry, double zigzag down correction, possibly done. If you're gonna go long on this one, you put your stop below this low on stock, and the low is 741. Right now we're at 1027. So I don't know, roughly a 30% risk. But I mean, if it's actually a major bottom, and from 2016 there, if it's a major bottom and we're actually heading higher, like way higher, I mean, this could be an incredible entry. But again, not the most compelling pattern off the bottom there. So if I go to the weekly, what do we got here? I don't know. Is this a 1 up, 2 down? Now we're working. I mean, what is that? Doesn't look like a third wave to me. Pretty unclear here off the bottom. So I'm not really seeing a trade per se. But if you're looking just for something in a long-term portfolio, something you think might be good in 10 or 20 years, something like that, really long time frame, it's probably not a terrible thing to start taking a bite at, and maybe just on pullbacks, buy a little more, build a position. Certainly no rush to build a position here because it's not exactly trending strongly at this time, but that could change in the future. So yeah, interesting here. I'm not really, again, uranium certainly should be on the radar, but I'm not seeing a clear trade setup at this point, but potentially with a longer term outlook, you could start making some entries here, at least on the on the stocks, CCJ and YCA. Those could be decent long-term plays, but yeah, other than that, I'm not seeing a whole lot. All right, Serial Trader signing off.